and business consultant Requisite, and I'm trying to get about managing the assets of a business. Cumani, thank you so much for being with us. Welcome. Good afternoon.
Thank you so much, Thandi, for having me today. Good afternoon to the listeners, and happy Budget Speech Day.
I didn't see that one coming. Happy Budget Speech Day. I'm telling you, you already touching on the fact that on what I had mentioned earlier about namhlanje ke lola suku lukhulu, as a country, we are all looking and anticipating, waiting. I think we've got about just a couple of more minutes, just about 30 minutes or so before the Honorable Minister goes up and delivers the budget speech. And cases our money touch on it throughout the show. We're going to be having this first conversation around managing the assets of a business. And I wanted to start off by asking you, Ubana, what value comes from managing the assets of a business? Because I think it's important that we start there and highlight ukubaleka, of actually being able to manage your assets as a business.
Okay, so any type of business will have generally two types of assets. You've got your long-term assets, which deal with capital budgeting. Mm-hmm. And then you've got your current assets, which then deal with your day-to-day cash flow.
Okay.
Now, the value that comes from managing your short-term assets, these are your current assets, it means that you are able to easier manage the growth phase of your business.
Okay.
Simply because the growth phase comes with a lot of turbulence. It's easier to make mistakes during that time because that is where your business model generates the most revenue.
Okay.
Right? So that's the main advantage of managing your current assets.
Okay.
Yeah. And this is especially true for businesses that tend to be undercapitalized.
Okay.
Businesses that are still in the seed capital phase of development. Remember, we first start with introduction, then growth phase. So seed capital would speak mostly to the introduction phase of your business, whereas development capital would then attend to the growth phase of your business. And then some of these businesses have a lower days of working capital ratio.
Okay.
Right? So this means that they are cash intensive.
Okay.
Now, immediately when we talk of businesses that are cash intensive, that's where mistakes tend to crop up. Remember last week we spoke about the profit trap.
Okay.
And then these are businesses that tend to have liquidity problems as well. So it becomes even more important then to manage, especially your current assets, because they speak to the now.
And in terms of the long-term assets, because I think it's very beautiful that you are giving us that split of assets as funny anyway.
Yes.
Actually, there are those that are within the current, the now, and then there are those that are kind of long-term in their nature. So in terms of the value that you get as well from managing your long-term assets, do you maybe want to touch on that as well?
So with long-term assets, remember we specifically talking about plant, we're talking about property.
Sure.
We're talking about equipment that is capital intensive. So that is where you would now have to look at your asset depreciation methods.
Okay.
Those specifically come into play because remember, these are huge assets that can either bring quite a lot of cash injection into the business, or on the flip side, they can take away quite a lot of cash out of the business because of their value.
Okay.
And how much these assets are worth. Because remember, if we're talking about warehouses, if we're talking about huge equipment, if you're running a construction company, these are items that can cost quite a lot of money and put severe pressure on your balance sheet and on your liquidity as well. So the proper allocating the proper asset depreciation method is key when it comes to your long-term assets. The long-term assets obviously are assets that can be disposed of after 12 months.
Okay.
Because of their nature, whereas short-term assets, you can dispose of them within 12 months.
Sure. Interesting. And another thing that I think, smaller businesses struggle with is even keeping track of the assets that you have.
Yes.
and
Yes,
I would understand what the problem is. Imagine you're starting a business and it's still a one-man show.
Yeah.
So you're collecting items as you're going, and you've got a pressure of ensuring that your business is able to sell.
Yes.
You're having your sales at a certain level. You're able to market the business, like you're able to even deliver the product or the service. Your pressures are so many because
Yeah.
you are still starting out. To say like your business is still small. And now someone comes and talks about asset management, and you're thinking, yo, I've been in this process of just collecting, and I don't even know how many assets. I know top of my head type of thing, like
Generalizing,
yes,
yes.
generalized. So I wanted you to maybe also talk about Ubana. How can a business practically keep track of e-assets? And in time, what would be the strategy? Even talking to someone who's starting, so that it's not messed up at the like so hambile.
Yes.
But even if so, how do you then work it back?
Work it back. Well, look, simply put, and without complicating the matter, you would definitely need to look at your stock keeping methods
Okay.
and how you keep those up to date. Some people prefer to keep hard copies of their stock keeping methods, whether it's by writing and keeping a physical
List.
copy and storing it. Well, other people will use technology that is available, especially in the accounting space. Now, when it comes to perishables, items that have an expiry date, you would then need to look at accounting systems such as LIFO and FIFO. Those then speak to which assets have been on the shelf the longest. That must now clear up that shelf space for newer stock that is still within the expiry date. So when it comes to perishables, it becomes a bit tricky, and that's where you would then need the expertise of an accountant to decide and to look at the best system of stock keeping. Like I said, it can either be LIFO or FIFO. Whereas with someone who is in farming and you're basically dealing with livestock, the easiest way is basically to count each head of a livestock, and that's the best way to keep track of your assets. So
Okay.
it just depends if your
On the type
assets
of
are
business.
perishables or if these are just assets that are non-perishables.
All right. And when we're talking about Lumcibi or assets in a company, there's also talk about the balance sheet and
Yes.
and the reflection of it being, it talks to the value of the company and, how the company is and how it's structured. Now, how important is asset management, or the correlation between asset management and the value of the company through, documents such as the balance sheet?
So this, in essence, takes us to the accounting equation,
Okay.
which is your assets equals liabilities plus your owner's equity. Simply put.
Okay.
So as the value of your assets increases, so does the owner's equity increase with the assets.
Sure.
And then obviously, when we're talking about assets, like I mentioned, you've got your long-term assets. These are your buildings, your plant, your warehouses, and then you've got your current assets, which could be cash and accounts receivables. Your debtors book
Okay.
that can also be deemed as a current assets. But when we are looking specifically at the balance sheet and how this correlates, then the accounting equation is the best way to look at it and to go about it.
So if you don't take care of, could you say that if you don't take care of your assets and manage them appropriately,
Yes.
then you will have a misleading balance sheet?
Yes, because the value of your assets is specifically tied to your owner's equity. So once you neglect your assets, you are then compromising the value of owner's equity, because they go hand in hand.
Okay.
which also then means that you are compromising the future value of your business for someone who would be interested
To invest
in
or
investing
sure,
in the
sure,
business
sure,
as well.
sure.
Because if you're compromising the value of the business for the current investors, future investors will certainly not have faith in your business and in your management skills.
And now, when we're talking also about the assets, there's a language that comes up around depreciation. I think you
Yes.
also mentioned something about depreciation, and I wanted you maybe to walk us through, in terms of what, how does depreciation affect your assets? Also, how do you know when to do it? When to
Okay.
depreciate the assets? Because some people would have in Doyobana, it's still valuable at its original,
Yeah.
value and forever because it's still functioning fine and all that.
Yes.
So, talk to us about depreciation and how it works in terms of how it affects the asset management and the assets that you have in the business.
Yeah, and it's just unfortunate that your sentiment as the owner of the asset doesn't count.
Okay.
What counts are the numbers.
It's
and the
not
book
your it's not
value.
your feelings,
Yeah. So
emotions,
business
and
doesn't work like that.
Eish.
So depreciation of value looks at your asset depreciation methods, right? That I touched on earlier. So the most widely used method of depreciation is the straight line method.
Okay.
Of calculating a depreciation. And then others will include units of production method. We also have your written down value method.
Okay.
We also have the sum of years digits method, and then we also have the declining balance method.
Okay.
Now, your accountant will then advise you and tell you, based on the asset that you are looking to sell, which method would apply best to that particular asset.
Okay.
So, for example, if you are appraising a house, there's a different method used to get to the intrinsic value of that property after you have purchased it, you have bought that property.
Sure.
Versus if you are looking to sell your vehicle, there's now a different method to calculate the true value of that vehicle, whether it's a couple of months old or a couple of years old. So it just depends on the asset and the method that will then be employed to get to the true value of that particular asset.
Sure. And do you think that sometimes keeping, okay, I'm going to throw in another term, which is, an asset register.
Yes.
Which is what you have as a list or as it keeps track of what assets you have and also the value and when you bought them, what the value was when you bought them, how obviously incorporating as well the method that you're going to use, the depreciation method on the assets, etc., etc.
Yes.
Now, I wanted us to look at is it possible for a business to keep assets that end up being expensive to keep? I don't know how to put this question, but where in your mind as the small business you're thinking you want to hold on to this asset for dear life, and you don't want to let go of it, and in you keeping it, mhlawumbi, it becomes expensive. Hence, mhlawumbi, one would be able to explain about why you need to have an asset register and get assets off that register over time because of reasons such as mhlawumbi keeping them becomes expensive.
Look, an asset register is always a good idea to have, and obviously you develop that with the help of an accountant, because remember we're looking at the type of asset that you are keeping. Now, when it comes to hanging on to that particular asset, you also now need to look at how much is it costing you to safekeep and to safeguard that asset. So if we're looking at a vehicle, your insurance company is going to ask you, is the vehicle locked up in a garage that you can lock? And does the house have an alarm system? Then obviously that will then determine the value of the premium that you are going to pay towards the insurance of that vehicle. So we must look at it in that context. Firstly, how much is it going to cost me to lock the garage and to make sure that it operates? And if I need an alarm based on the area that I'm in, does the area have a high crime rate? then how much is the alarm system going to cost me and the services of the security company? So that just speaks to vehicles. When we're looking at stock, if you are perhaps a retailer, then you need to look at the floor space that the stock that you are keeping is going to occupy, and the cost that is involved in you having
Keeping.
that floor space. Because remember, sometimes as a business owner, you are going to buy items and stock at discounted rates.
Okay.
During maybe a period where there's a special, which works for you because you are now getting more for less as a business owner. But you must also keep in mind that the more you buy, the more liability you're taking on in terms of the cost of safekeeping and safeguarding the stock. The vehicles, etc. Before COVID, there was a system in business called just-in-time.
Okay.
Which was used a lot by your automobile manufacturers. So what they would do to minimize the cost of keeping parts for certain vehicles, because you have to remember that, for example, in South Africa, we import a lot of our vehicles.
Sure.
And sometimes even if we do the assembly here in South Africa, maybe in East London with the Mercedes-Benz, VW, in PE, those parts already come and they are already manufactured. So the only thing we do here is to assemble them. So now if someone is looking for a part, maybe they were involved in an accident and they don't necessarily want to sell the vehicle because it hasn't been written off. So they just need a part of that vehicle. Then what automobile manufacturers do to save costs is to implement the just-in-time system where they can order the part from a German in Stuttgart instead of taking on the cost of keeping the part here and anticipating that
it might
demand
be needed.
is abakhona maybe over the festive season where accidents happen. So obviously that got compromised. That type of system got compromised when
COVID.
logistic systems became disrupted due to COVID. So there's a lot that you need to look at around that specifically.
Now, also emphasizing the aspect here, of letting go of assets. And
Yes.
I mean, letting go of assets, you could probably, but not for business. You can't just give it away. I know for non-profit organizations, when they close, they must, the one needs to take the assets and give it to an existing one type of, I think it's a regulation.
Yeah.
So, but in the private sector, like PTYs and stuff, letting go of assets can't really look like giving things away. So it could look more like selling them. Ne?
Yes.
So do you think that there is a right or wrong way of letting go of assets?
So the wrong way would be, like I mentioned earlier when we started the show, to look at an approach that is too generalized in terms of getting to the true value of that particular asset. That would definitely be the wrong way to go about it. The right way to go about it would be to allocate the proper method of depreciation for that particular asset. So if you're looking at a vehicle, there's a particular method that is more suited to vehicles compared to your perishable goods and your perishable stock. That would then be a different method as well. So it just depends what the asset is and the type of method that you are employing to get to the true value.
Now, if a small business is listening in today and they're thinking they've never really gotten into the habit of managing their assets properly, obviously the type of Lena asset under the current assets, which is stock, they would manage it properly because it's literally where the money comes from in a direct sense. Yeah, but in a way. Yes. So, but the other areas of the assets, because there are so many different assets that you can find within a business, and sometimes is disregarded, but they actually still also assets of such a business. Now, if a business wants to start the process of actually managing their assets, what would be the best route, to take? Like, what would be the simple process for them to start, to kickstart that?
Look, the simplest way would be to identify your sources of income as a business, because that then makes it easier to manage, especially your current assets.
Okay.
So your sources of income would be cash sales,
Okay.
right? Because that speaks to liquidity as well. Owner's investment. If maybe post your seed capital stage, you decide to further reinvest into the business
Okay.
via capital amount, that would also then speak to the amount of cash that is available
have.
within the business. Then the same would apply for borrowed funds. So if you don't have the full amount that you would need for your growth aspirations, then obviously you would seek a loan either from
PM,
another
other people's
business, a
money.
bank, or other investors as well. And then the sale of fixed assets. Remember, some of your fixed assets take longer to sell.
Sure.
But once you actually do get around to selling them, then that's good revenue. That's good income. Let me not say revenue. That's good income for your business, because maybe that asset wasn't in particular use, or it became redundant for your model as the
Sure,
business
grows.
grows. Yeah. And then the collection of accounts receivables. So if you are someone who has a debtors book that is too big, then you would obviously now need to start looking at getting that money back from your customers. Bearing in mind that when you got into the business, you did not make provision for you to chase your customers that are not paying, because you're not a debt collector. So that's where factoring would come in. That is where you are able to then sell your debtors book to a bigger company, saying to them, listen, my business needs to grow, and I cannot spend too much time chasing after customers that don't pay. So the factoring method would be useful. And then the banks would also buy your debtors book, obviously post due diligence to make sure that the customers are what they say they are according to you. Then that would also help in terms of just managing your assets as well. Then we'd also look at sources of payments.
Okay.
So remember, we're looking at sources of income. Now we're looking at sources of payments. These would be your expenses, monthly expenses, your recurring expenses, inventory as well. Dividends would be another one. If you do decide to pay dividends for that particular year, maybe you overperformed for that particular year, the industry favored you somehow, or regulation that was introduced. And then the purchase of fixed assets. So instead of selling fixed assets, you're now purchasing fixed assets, and that is money going out of the business. So once you get around your sources of income and your sources of expenditure as a small business owner, then you are in a good setting to actually manage your assets.
All right. Okay, thank you so much for your input in terms of the asset management. But before I let you go, I wanted you uhlomle as well, on the CS in about 10 minutes or so, the delivery of the budget speech is going to be coming through from the Minister of Finance.
Yes.
What are your thoughts in terms of what the focus might be, and also the impact of the delivery? Because and there's going to be a shift that's going to happen.
Yeah.
Let me not preempt and say anything, but what do you think? Because it's going to shift whether to a positive direction or to a negative direction.
Look, as far as the focus goes, I mean, it could be anything. Because remember, our leaders have their own agendas as well. So the focus, your guess is as good as mine. But in terms of the impact on financial markets and price action, you have to remember that the president has already touched on something quite important, which was the pronouncement of the intention to have a minister of electricity. So that has already been priced into the markets.
Sure.
Even the minister in the presidency, during an interview with Professor Taban, JJ Taban, said that he was quoting a sentence from one of the business publications to say that the short-term outlook for the country has improved ever since the president made
Delivered.
those pronouncements.
Okay.
This is now from an investor point of view,
Okay.
right? So the impact has, I'm repeating myself, the impact has already been priced into the market from my view.
Okay. So you
Bearing
didn't.
in mind, the South African bank governor did also warn us that we would only be seeing 0.6% economic growth this year,
Sure.
largely due to load shedding, right? So it was very important then, based on that, for the president to quickly address it in his State of the Nation address. So if I were the Minister of Finance, I would play it safe and basically stick to what the president has already pronounced, based on what the minister in the presidency said, Mr. Gungubele, in terms of the positive outlook over the short term.
Sure.
But the focus is anyone's guess. Yeah.
Okay, thank you so much for that
Only a
input.
pleasure.
All right, Kimpula Blue of Ghana Community Radio conversation now that we've just had with Cumani Nobongoza, founder and business consultant at Requisite. We're talking about the management or managing the assets of your business. Quite an extensive conversation. We're going to be touching more on some of the points that he made. But do make sure that